We talk about China in particular. I mean, you've downgraded China's growth from 4.6% to 4% for the year. I'm just wondering what this could trickle down to. Might we see contagion in Asia, economic and financial contagion?
Thank you, Haslinda. So yes, we have revised our growth forecast for China to 4% this year and 4% next year. It's a cumulative reduction of 0.6 percentage points relative to October. Now, Haslinda, we've also revised forecasts for all countries in the Asian region. In fact, if you look at Asia overall, we have it growing at 3.9% this year and 4% this year, next year, which is a cumulative adjustment downward of 0.8 percentage points, which is the sharpest adjustment since the pandemic. And it's not just China. In the case of, we revised India modestly a bit, but we have revised quite a bit for the ASEAN, and notably some countries which have large exposures in terms of exports to the US, because they're getting hit both by a decline in external demand, including from the US, and because they've been hit by huge tariffs. If you look at the ASEAN, Haslinda, for instance, countries like Cambodia, their share of exports to the US is about 40%. Vietnam is 30%, and Thailand is 20%. And these countries have also been hit by tariff rates in the range of 40 and above %. So that explains why we have revised quite significantly ASEAN, and also other countries, including Korea, for instance. Korea we revised down by 2 percentage points in the next 2 years. We have Korea growing at 1% this year and 1.4% this year. And in some sense, our projections for Korea are validated by what we saw in the first quarter.
Right. I'm just wondering, though, do you expect China to weaken further from here? After all, we've not seen the full impact on exporters, yes, for instance. And might that trickle down? Might you have to relook at your numbers again?
Absolutely. So Haslinda, the numbers I gave you is based on what we call as a reference forecast. These forecasts are based on a tariff scenario which prevailed on April 4th. So whatever happens since then is not internalized in this reference forecast. But what we have done also is we have done a top-down forecast. As you know, Haslinda, the way we do forecasts is a bottom-up. All countries provide their assumptions, and then we aggregate it at the regional and global level. But since we didn't have much time after April 4th, for what we have done is we've done a top-down scenario where we look at what happens to global growth and growth elsewhere when the tariff pause is more permanent. There, what we find interestingly is that global growth numbers don't change as much, but regional differences are large, and Asia gets hit much harder there. Because of
China
sorry, go ahead.
I want to talk about China. It's trying to rebalance its economy. It wants to rely more on domestic consumption. It's taking efforts to do that. How would you rate China's efforts? We know that, the trickle-down effects is going to take quite some time before it can be reflected in its growth numbers. How are you assessing the efforts being taken by China?
So if I had to sum it up in one line, I would say all the efforts are in the right direction, but it's not enough. If you want to rebalance, China needs to do more in terms of, one, rehabilitating the property sector. We have put out numbers in the past which said that the central government needs to spend up to 5% over 3 years to fully fix the problem in the property sector, notably finish the unfinished housing, take care of the non-viable developers, and so on. And it also needs to put more money to beef up social safety nets. So all those things are important. What we've seen is some movement towards the social safety nets in terms of fixing the retirement plan in China, also increasing retirement, the pensions in the rural areas. So they have made some efforts towards both trying to fix the property sector and try to build social safety nets. But these are small steps. Much more effort is needed to have that rebalancing away from export-led growth to more domestic demand-led growth.
We've seen how China has been fixing its currency weaker than anticipated by the market. Do you see a devaluation coming like what we saw back in 2015? And what impact would that have? What risks are there of a devaluation in the Chinese yuan?
So as the change you mentioned, the weakness you mentioned is very small, right? So far, over the past 2 or 3 years, they've kept the exchange rate pretty much at a quite stable level. It has only recently you saw some fixing at a slightly weaker rate. Again, that's very modest. But the point I would say is that if they don't rebalance enough, then already you see signs of, the rising signs of deflation, that, and if domestic demand doesn't pick up, you're going to see more deflation in the economy, lower export prices, and that can have spillover to the rest of the world, where you see Chinese goods being much cheaper in rest of Asia and rest of the world, and that's the kind of spillover other countries don't want to see. So clearly, more efforts are needed to rebalance the economy, in particular to push up domestic demand. And also, when they try doing that, they can give a greater role to the services sector, right? And if all of that is done, then you can see greater rebalancing. Right now, what we see is some modest steps in terms of social safety nets. They're trying to pump up the trade-in program, but all that is not enough. Much more is needed.
When you take a look at the tariff war right now, Krishna, I'm just wondering, what are the hidden risks? What are people not talking about enough?
So, the one thing which we've talked about is the fact that uncertainty right now is at a very high level. In fact, it's off the charts. And if you look at, uncertainty, and also predictability, right? In terms of what can we expect in terms of a trading environment which is clear, stable, and predictable. You don't see that. The question, of course, is how do these negotiations proceed? It's clearly the U.S. is doing it country by country. As you noted earlier, they've had beginning negotiations with Japan, Korea, and so on. How these things pan out, what does it mean for the smaller economies in the region, which have been hit hard, right? Like Vietnam, Cambodia, Thailand, these are all much smaller economies. How do they go from here? How do these trade negotiations, what do they result in? I think it's very unpredictable at this point in time. So it's very hard to say. And that's why we're saying that, to our forecast, there are significant downside risks, both related to heightened uncertainty, what happens to financial conditions. All that it's quite unpredictable at this point in time. So that's why we say, to our reference forecast, there are significant downside risks.
Adding to the issue, of course, is the weakening dollar. Year to date, most Asian currencies, bar the Malaysian ringgit, is actually up against the USD. The yen, in particular, higher by about 10%. This comes at a time when exports are at risk. How do you see, central banks around in Asia balancing growth and fighting inflation when currencies are also rising versus the USD?
So one thing I would say is that if you look at Asian economies, let's keep Japan aside, inflation across the region is at or below the target rate. So which means that central banks in the region have much more space to ease monetary policy. Of course, then the question is, if they ease monetary policy and if the interest rates are higher for longer in the U.S., that could have implications for the currency. So what we are advising countries is, let the exchange rate be the shock absorber. Let monetary policy provide you the space you need to adjust to the shock, because we feel that Asia, in particular, does not have much by way of fiscal space. So you want the exchange rates to adjust, to be the buffer against shocks. Monetary policy, there's room to ease. And if exchange rates become very volatile, and there's a lot of volatility in exchange rate markets, then in some cases we see the role for intervention to limit volatility. But overall, we think that exchange rate should be the buffer against shocks. There's room to ease monetary policy. On fiscal, we believe that consolidation is what is needed, given the fact that most countries in the region spent a lot in the fallout from the pandemic. But again, we say that if there is a need for providing fiscal support, do that in a targeted way and in a time-bound manner, so that you balance between providing support to the economy while making sure that the fiscal integrity is maintained.
Are any of the economies here in Asia at risk of slipping into deflation? And linked to that, what do you see the situation in the U.S.? How might that play out here in Asia?
So to your point, two countries where in China, for sure, the deflation risks have gone up. In fact, you look at the numbers, there have been several quarters now of negative growth in GDP and also in headline inflation. So deflation risks have clearly risen in China. The inflation is also pretty low in Thailand, right? So what the tariffs do? The tariffs for in a country with the imposing country, which is the U.S., this is a supply shock. But for countries which are the recipients, the countries which are being hit by the tariffs, it's a demand shock, right? So they have to deal with that demand shock. In the case of countries where we see these deflation risks pretty significant, we see the room for both. In the case of China, for sure, we see room for more monetary easing. We also see room for fiscal easing to support the rebalancing. You need that. That can get you out of the deflation territory.
Earlier, Krishna, you talked about how you see downside risks to the economy here in Asia. How do you compare that versus the US and Europe, for instance?
So clearly the US
the downside
also,
risks.
Yeah, I think our point is that the downside risks are there to the global outlook, which includes the US, but they're also equally relevant for countries in Asia. So yes, there are the uncertainty. The uncertainty remains pretty high, not just for Asia, but for all of the world, including the US. Markets are very volatile across both advanced countries and emerging markets. I must say that in the case of Asia, the equity markets have been a lot more volatile. If you look at currency markets and bond yields, they've been much more stable compared to the equity markets. And that's also the case in equity markets in the US have also been very volatile. So these are the kind of risks. How do financial conditions adjust? What will happen to commodity prices? All these things are quite unknown at this point in time. That's why we see the risks are to the downside, not just for Asia, but for the rest of the world too.
But are you comfortable with the fundamentals you're seeing in Asia right now? Are there vulnerabilities that take you back to the days of the Asian crisis, Asian financial crisis, for instance? Are you concerned?
See, if you compare the Asian financial crisis and where you are right now, a big difference is that policy frameworks, institutions have really gained credibility in Asia. With be the independent central banks, inflation targeting, making sure that you don't have too much currency mismatch in balance sheets. So there have been huge amount of policy and institutional reform in Asia since the Asian financial crisis. So fundamentals in Asia are much better. You cannot even compare the Asian crisis now. Fundamentals are much better. However, this is a region which has relied a lot on exports, right? If you look at the pre-pandemic trend, then domestic demand has not recovered at all, has not recovered quite a bit in emerging Asia. Right? A lot of it is depending on exports. So to the extent that this region depends a lot on exports and external demand is weakening and tariffs are being imposed, it's a double whammy for this region. So that's why it's imperative that the region as a whole pivot towards greater balance in its growth model, towards more reliance on domestic demand than it's been. And for that, to have a stronger domestic demand rebound, you have to have structural reforms which can underpin a pickup in consumption on a more durable basis, a pickup in investment. Even in countries which are doing quite well in terms of, you look at India, where growth rates are, it's 6.2 and 6.3%. The headline numbers are very good. It's the fastest growing major economy. But even in countries like in India, private demand is very weak, right? So in countries across Asia, depending upon the country we're talking about, either it's consumption very weak or investment which is very weak. And so domestic demand needs a lot of support, both through macro policy and through deeper structural reforms. And that pivot will help Asia recover on a more durable basis from this shock.
Krishna, there's a huge concern about the region's external debt. This is a region with huge external debt. Is it able to handle outflows, for instance? Are you confident it will be able to manage?
See, at this point in time, if you look at the debt situation, I won't say it is equally bad in all countries, right? It is, yes, debt levels have risen. In fact, the number I quote is, from 2007 to when it was 25%, now, something like it's more than 35% of Asia accounts for more than 35% of global debt. The number is rising. Again, a lot of that is China. So, and for China, we say that, they have some space to provide support in the near term, but they have to embark on medium-term consolidation. But overall, a line on debt is that, on debt on fiscal, is that you have some space in some countries, But overall, the stance of fiscal should be more more along the way of consolidation. And where you want to provide support in response to these shocks, it should be targeted and very much time bound. So yes, debt levels have risen, and that's why we're pushing for greater consolidation in the region, notably in some countries.
Krishna, is there reason to be concerned about Indonesia? Its currency, one of the worst in Asia right now, along with the Malaysian ringgit, and it has that high debt. The government, in fact, the central bank has been supporting the currency in a big way. Is there reason to be concerned about Indonesia?
So I mean, I talked about the ASEAN before. If you look at Indonesia, their exposure to the US, it's at a very small number. Only 10% of their exports go to the US, right? And if you look at the tariff rates on Indonesia, I'm looking at a number here, it's about 32%. So the external shock to Indonesia is much less contained compared to other ASEAN countries. Also, commodity prices are moving. So for Indonesia, the external shock itself is not as such a big drag as it is of some other ASEAN countries. What we would suggest is it's important to maintain the fiscal discipline, and I think they've done a good job there in trying to stick to the fiscal deficit target. So I think it's important that they stick to that. The fundamentals are pretty good. And they have the space going forward to also ease monetary policy. I think overall they are in much better shape than some other countries in the region.
Krishna, as we speak, we have breaking news. China weighing exempting some U.S. goods from tariffs, and that's because of our rising costs. We're talking about suspending its 125% tariffs on some U.S. imports, including medical equipment, industrial chemicals like ethane. Now, the exemptions being considered also include plane leases, as Chinese carriers rely on leasing fees to use some jets and would be financially ruined by the additional tariffs. What's your reaction to what we're seeing right now?
So I need to look at the news. I need to absorb the news. But I would say, Haslinda, that we're urging all countries to work constructively to resolve tensions and provide a much-needed certainty, right? And they can do that by promoting a clear, stable, and predictable trade environment. And that falls on every country. And then also we're saying that countries can pursue pragmatic cooperation and deeper integration to regional, cross-regional trade agreements or non-discriminatory reduction of trade barriers. So I think what you just read out to me seems like a step in the right direction, which is along the lines of what we would think. But I need to absorb the news more to actually give you a commentary on that.
To that point, Krishna, I'm just wondering what concessions you think China can make to allay the tariff situation between the two sides?
I think the bigger problem with the meta problem, which a lot of countries see with China, is the fact that this is an economy which is largely dependent on exports, right? It's and with inflation being very low, in fact, close to deflation, export prices in China have also declined, and so it's huge competitive advantage it has, and that's why it's exporting a lot, not just to the rest of Asia, but to other parts of the world. So the meta problem people have with China is that it relies a lot on exports. It does not over the years, which has led to imbalances. So they need to pivot towards greater domestic demand. So that is what people will be looking at in terms of is China doing enough to make that pivot? And that would be the meta point compared to whatever else we just talked about.
And might India benefit in the longer term with the tariffs imposed by the U.S. on China?
I think it definitely provides an opportunity for India to compete. But again, as I mentioned to you in the past, that again, a lot of reforms are needed in India. If India wants to compete with China and with other emerging economies, it needs to embark on greater reforms. Trade liberalization is one. Reforming labor codes is one. Is the other. Then you have push on infrastructure. There are many reforms which are needed, and the symptomatic of that, of what is needed, is the fact that private investment in India is still very muted. It's at 22% of GDP, but if you look at investment in machinery and equipment, which adds to productivity, that's been pretty sluggish.
Krishna.
So private investment needs to really pick up in India for it to
Right.
be able to compete.